Hey everybody, Kevin Trimmel here, your Southwest Florida real estate agent and broker. Today we are going to dive into something that I've seen a lot on the news lately, and it is the term of a buyer's market or a seller's market. So I'm going to break this down using basically four key metrics. Number one, it's going to be the median sales price, months of supply, total sales, and days on market. So we'll look at both national and more local Southwest Florida data. And then by the end of this video, you'll know exactly what kind of market we're in and how to take advantage of it, whether you're buying or selling. So first of all, let's dive in with what does it actually mean to be in a buyer's market or a seller's market. So let's start off with a buyer's market because that's something that is very common on the news right now. I see this in a lot of articles on a daily basis. So generally speaking, a buyer's market means that there are more homes for sale than buyers. So in short, there is an oversupply of homes relative to the demand that the buyers are willing to put up. So it means higher inventory, slower sales, and price reductions are common in a buyer's market. And as the name suggests, buyers have the leverage, aka they have more room to negotiate. So next up is the seller's market. So a seller's market is characterized by there being more buyers than homes for sale in a market. This market is generally characterized by low inventory, homes that sell very quickly, often with multiple offers, and it is not uncommon to see homes selling above asking price. This is the type of market we've had during the coronavirus years and after, but this is coming to an end as we speak, hence why I'm making this video. So in a seller's market, sellers basically hold the leverage. They can demand higher prices and better terms for themselves. But who actually defines what is a buyer's market, or when are you in a buyer's market and when are you in a seller's market? Is it just something that people kind of sense out of their gut? No, there's actually a generally accepted definition and number and metric that it is associated with different types of markets, and this metric is called months of supply. So months of supply is the number of months it would take at the current sales pace to use up all the existing inventory in your respective real estate market. It's a pretty simple metric, but it's very powerful. So generally speaking, anything under 5 to 6 months of supply in your market signifies a seller's market. If you're between 5 and 6 months, you're in a balanced market, and everything over 6 months of supply in your real estate market signifies a buyer's market. Okay, so now let's dive into the metrics, and let's start with the one that most people care about, which is the median price or the median sales price. Now, real quick, the definition of the median sales price is the price where half of the homes that are sold are priced lower and the other half are priced higher. So it's basically the midpoint. So let's break down this data. For this data, we will use data from the National Association of REALTORS and Federal Reserve, and I will link all of my sources down below. So in April of 2025, the median existing home price was $414,000, which was up 1.8% year over year. And this is actually the National Association of REALTORS' highest April median ever. So home prices are still high, but growth is slowing and hinting at a more balanced market. Now, there's other markets in the United States where median home prices are already starting to come down. So for example, in Florida and more locally where I'm at in Southwest Florida, we are down about roughly 10% plus minus, and depending on what segment of the market you look at, but we are definitely coming down from our highs, which is no secret. You can read about that anywhere in the news or if you turn on the TV. So home prices are still growing on a national level, but that growth is slowing. Now, to get a better sense of where the market is heading, let's now look at the months of supply, the metric that I was talking about earlier. And again, months of supply is a great measure of market balance. So For existing home inventory in April of 2025, we had about 4.4 months of supply, which is up from 4.0 months of supply in March of this year, and then 3.5 a year ago. So as you can see on a national level, those months of supply are definitely ticking up. Now again, in Florida, this looks way different. We're way higher. We're between 8 to 10 months, so we are definitely in a buyer's market. If you want Florida specific or Southwest Florida specific market data, I will actually link that here in the video description, so you will be able to see that right here. So that puts existing homes right now on a national level in a balanced market, right? We're between, we're at 4.4, but we're definitely trending up. So I would expect that to continue to rise over the next coming weeks and months, and then nationally for us to be more in a buyer's market as well. So what's interesting, or why I say that, is because a good measure to see where the market might be heading is to look at new home sales. So the 4.4 months of supply was existing home sales. So when we actually look at the data from the Federal Reserve at new home months of supply for April of 2025, we are actually at 8.1 months. So as you can see, new homes were definitely firmly in buyer's market territory. There's plenty of inventory and there's more leverage for buyers, hence why builders are giving great incentives like rate buy downs, closing cost incentives, price reductions on the homes, things like that. So again, the new home months of supply is a great indicator of where the existing home inventory market might go, which indicates more supply, more leverage for buyers, which will also in turn put a lower or downward pressure on the median price. Now, the next metric I want to look at is total home sales. So this is a metric for showing how active the market actually is, okay? Number one thing is obviously sales. So total sales is a great way of seeing how active the market actually is. And in the National Association of REALTORS reported that existing home sales hit 4 million annualized in April, which is down 0.5% month over month. And it's down about 2% year over year. So this is another indicator that overall fewer homes are selling now compared to last year, which is another sign of cooling. Now, the last metric I want to look at is days on market. And days on market just tells us how long a home is sitting before it goes under contract. And the National Association of Realtors shows that homes average 29 days on market in April of 2025, which is actually down from March of 2025 with 36 days, but it's up from April of last year, 2024, with 26 days. So the discrepancy between April and March can just be due to seasonality. It can be an outlier. I really wouldn't put too much emphasis in that. I would more look at the year over year data. And again, if you look at markets in the Sun Belt, like Florida, Texas is another big one. These days on market are significantly higher. The months of supply are significantly higher. The median sales price is significantly lower year over year, and so are the total sales. So if you use the historical standards, 29 days on market is still a very fast pace, but it is slowing compared to year over year, which is another hint that buyers are taking their time again. So to summarize it, prices are high, but the growth is slowing. They're holding steady. In a lot of Sunbelt markets, prices are actually down year over year, and they're continuing to come down. Existing home supply is balanced, and it's slightly shifting towards the buyers every month. New build home supply is clearly buyer favored, which could be an indicator where the market is going for existing home sales. Sales activity overall is inching down, and homes are slowing slightly as far as like days on market, but they're still moving relatively fast on a national level. Again, just want to stress, if you're in the Sun Belt, Florida, Texas, other states, You're already way ahead of the national market. You are already way in buyer's market territory. You are already way higher on median days on market. You're way lower in median home sales prices. Okay, so to conclude it on a national level, we are looking at a balanced national market leaning towards buyers, especially for new construction. And this is with data from the National Association of REALTORS and the Federal Reserve. Now, what does this mean for you? So if you're a buyer and you're in the market to buy a home and you've maybe been waiting for the last couple weeks, months, and years for the right opportunity, I would say we are approaching that opportunity. So if we're in a buyer's market in states in the Sun Belt like Florida, Texas, I know parts of Colorado as well, or if your market is starting to shift into a buyer's market, keep in mind you now have the leverage. You can now negotiate price, terms, and concessions. You can also shop without rushing. The days of a home being listed and it's selling within 48 hours, generally speaking, are gone. But do still make sure that you are pre-approved so you're ready to strike when a good deal comes on. Now, what does this mean for you if you are a seller in a buyer's market? So I cannot stress this enough. You have to price your home right from the start. Do not expect a bidding war. Those days, unfortunately, for you sellers are over. And offer buyer incentives right from the start, such as closing cost credits, rate buy downs, things like that. And also, you have to look at most recent comps. So right now, the market is shifting very, very rapidly. If you look at a comp in your neighborhood and say, hey, my neighbor sold the exact same floor plan 6 months ago for $750,000, odds are if you're in a shifting market like we are in Florida, for example, that your house today is not worth $750,000. So you really need to look at the most recent comps. Right now, when I do CMAs or when I do price suggestions for my sellers, I typically, if I can find enough good comps, do not go past 120 days into the past. So I would really urge you sellers to look at the most recent comps, not the comps that you want that happened 6 months ago, because again, your home will just be sitting on the market. So if you're serious about selling, again, price it right from the start, have the right expectations about what kind of market you're in, offer buyer incentives right from the start, and of course work with a listing agent who markets aggressively, which is becoming more and more important now that we're heading into a buyer's market locally and nationally, and knows how to position your home strategically. So what's ahead in 2025 for the real estate market? So inventory is likely to grow throughout the year. Mortgage rates are expected, unfortunately, to continue to stay between 6 and 7% until we can get some easement in the bond market, and of course, more easement from the Federal Reserve and things like that, and the uncertainty with the tariffs kind of play out a little bit more. But like I said, mortgage rates are expected to stay between 6 and 7, which is pretty much where they are now. And then prices are definitely projected to flatten or decline depending on where you are in the United States. So especially in overbuilt areas or really investor-heavy markets like Florida and Texas, we're definitely seeing price declines. So this all sounds very bad and doom and gloom. So should you worry? My answer is a clear no. I had somebody comment on one of my marketing posts the other day where I was kind of advertising a $1 million home in Bonita Springs here in Southwest Florida. And the comment was, okay, I'll just wait in 4 years to buy this home for $500,000. So, this person's basically waiting for a 50% price drop in the Florida housing market. One thing I can tell you guys for certain is that if that happens, we have way bigger problems than thinking about buying homes. But to back this up kind of with some solid data on why I think you should not worry, is number one, let's look at delinquencies and foreclosures. So at the height of the 2008, 2009 housing crash, housing bubble, whatever you want to call it, in Q1 of 2010, the national delinquency rate in mortgages was 11.5%. In Q1 of 2025, it was 1.78. So borrowers are still making their payments. People are still employed. I think the latest data shows that the unemployment rate is at 4.2%, which is good. Another big thing, what people don't realize, is that the way that mortgages work today, at least on the residential side, is completely different than how they were during 08, 09. So I think over 90% of mortgages these days are fixed rate mortgages. So what does that mean? It gives borrowers a way better budgeting monthly on what their bills are. So your rate is locked in for 30 years. Even if you locked it in at a 7% rate, your principal interest payment, unless you refinance, will be the same for the next 30 years. The problem we had in 2008, 2009 was that most loans were adjustable rate mortgages, and borrowers with bad credit kind of got into some adjustable rate mortgages, and 3, 4, 5 years later, all of a sudden their rate doubled and their payment doubled, and that's where a lot of these foreclosures came from as well. So we don't have that right now. Now, also, let's take Florida, which right now, as the time of this recording, which is June of 2025, is pretty much the worst performing real estate market in the nation. So let's look at inventory in Florida. So in 2019, so pre-pandemic levels, our homes for sale in Florida hovered between 130,000 and 150,000. In May of 2025, we had 180,000 homes for sale. So is it elevated? Yes, but is it numbers that are great cause for concern at this moment in time? No. Also, if you look at the bigger picture, you hear all these data, and I'm guilty of it too. I've said it before. Year over year, we're down in Florida, 8 to 11% on the median home sales price, but that's year over year. I mean, if you look at the last 5 years since Q1 of 2020, pretty much all metro areas in Florida are still up between 40 and 55%. So they're still up 8 to 11% on an annual basis, which is, incredible. So, you're up 50% and now you're down 10, you're still up 40, like overall, So there's no really cause for concern there yet either. Lastly, I would just urge people to take a step back and look at the picture of what home prices in the United States historically have been doing since this data is available. I will put a screenshot in here right now. As you can see, home prices generally over the long run always tend to go up. As Warren Buffett said, time in the market is more important than timing the market. So, if you want to buy a home, as you can see here at the tail end of this data, we are seeing prices coming down, which I think is a great opportunity for people that have been waiting on the sidelines right now, at least in Florida. I know, like I said, there's other parts in the country where prices might not have gone down so much, because what I think and a lot of experts and economists think is going to happen is once rates dip below 6%, let's say between 5 and 6%, there will be a flood of buyers entering the market again with this pent-up demand. And more demand typically means higher home prices. So this is a great window in time right now where, like I said, a buyer can get in that has been waiting on the sidelines. And once the rates come down, you refinance your loan, and then demand goes up again, which then steadily will increase the home prices again, which you can see here on this chart. I'm not making this up. I mean, this chart is pretty clear. I don't really expect a reversal of this trend, right? I mean, the trend is pretty clear. It's top right all day long. So that's kind of my opinion on it. So, should you be worried about, doom and gloom, your house being worth zero? Should you panic sell? My answer is absolutely no. If you don't have to sell right now, if it's more a want versus a need, I would probably hang on to your house for another couple of years. 1 to 2 years, 3 years, whatever it may be. If you're a buyer, especially if you're looking at some new construction product, I think right now is a great time. Like I said, builders, price reductions, incentives, rate buy downs. I've seen rates with builders be below 5%. They're throwing in closing costs. They've already reduced the prices of their home, at least here locally in Florida. So that's my opinion on where the train is headed, so to speak. So if you got any value from this video, it would really mean a lot to me if you could hit the like button, subscribe, and share this with someone who's thinking about moving. And if you're thinking about buying or selling locally here in Southwest Florida, just reach out to me. I'd be happy to guide you through every step. Again, this is Kevin Tremmel, and I'll see you on the next episode. Thanks.